Welcome back. You're still tuned into Trading Hour. Let's talk about IOC. Reported a very weak set of quarter two numbers. In fact, it was the weakest in the OMC space. Revenues fell almost 10%. Profits came at 180 crore rupees. This compares with 2,643 crore rupees in the previous quarter. Reported PAT included reversal of provision created towards VAT input credit. Strip of that, it would have been a loss as well. My colleague Sapna Das spoke to the Director of Finance of the company, Anuj Jain. He's optimistic on future profitability as margins are likely to recover in the second half. Listen in to that conversation.
See, oil sector doesn't work on quarter-to-quarter performance because we are sitting on a lot of inventories. Because we have 9 refineries pan-India basis. We have Panipat, we have Mathura. So we are sitting almost a 1 lakh crore of inventory in our books, whether it is crude oil, whether it is finished goods. So if the prices in the international market come down, we take a lot of inventory hit in my books of accounts. Apart from that, if you would have seen, the refining margins have also come down in the recent past. And so if you put together all the oil companies, whether it is my company or other companies or CPCL, MRPL, everybody has got because of the inventory losses as well as the poor refining margins in the system. As far as pain point is concerned, I would only say that it happens whenever the prices come down. But now taken the hit in my books of account, now onwards, since I almost have a 45 to 50 days crude oil inventory, whatever I buy today or in the past 1 month, now that crude will start coming in my system. And when I sell that crude, then I will start making profitability. So it's a one-time hit all the companies take, and then onwards it becomes a positive trajectory for other companies. So this is how I would say that it becomes in the oil sector whenever, if in the past 10 years you would have seen, whenever the prices come down.
Okay, so has it been a shock? Global crude coming off its highs, and do you see this stabilizing now? Number one. Number two, quickly on the LPG side. What are the concerns? Because the numbers there are quite big as far, not just IOC, but the other companies also, like 45 or 100 crores is, I think, HPCL's number. Yours around close to 9,000 odd crores, a negative buffer. So where do you see the situation, both on global crude prices and the LPG situation?
See, I'm not expert in this, but what we discuss internally, there are two factors. One is the international geopolitical tensions. It is putting the pricing upward trend. But it pushes the price upwards. But there's a lot of demand destruction in China and many of the countries in the world. And there's excess capacities in the world on crude oil on the product side. So the contra side, the geopolitical factors are making the prices up. But the other factor, particularly the demand destruction in many of the countries, is putting the prices down. And going forward, I think the world itself is seeing that India is a bright spot. We have continuously high demand. But being oil sector is not a country specific. Anything happens in the world affects the oil prices. Even if you see in the past few days, one news of Israel or Iran tensions going up, the prices go up by 5. Next day, the moment it shows, okay, they are not going to attack the refining system, the prices come down by 5. So highly volatile. So we are, it affects the companies like us who are continuously buying. But this is the way oil sector work. We always do our analysis on not on quarter basis. We do analysis on at least 1 year basis. Because if you see the history of Indian Oil, we have many quarters, we have negative profitability, then we go on a positive next side. So it's a very unique industry where we work in. As far as the LPG is concerned, already all the oil companies have given a disclosure in the books of accounts that there's a negative buffer in the books, but definitely the things are being discussed. And I hope the things will become better soon.
Okay. One last thing, sir. Including other products, how do you look at your marketing margins? I'm going to ask this question that there is a price cap, so to speak, to an extent, in some way or the other. How are the companies coping with it, and how do you see the road forward, especially when your global crude starts coming off? Does it create issues?
See, we have a basket of products. MS, HSD, LPG, so many other things are there. I think it's a basket of the product. Each product will have its own, like bitumen. Suddenly during the rainy season, it stops selling. Now it's the time we start selling the bitumen. So a lot of combinations are there. I would say we are we have the experience, all the companies have the experience of making this, quarter to quarter movements,
Transition.
and it's okay. We are more concerned about the inventories what we carry, because suppose Panipat, 15 days it takes time from pipelines from Kandwa and Mundra port to come here. Then my entire inventory is in my books. So if the prices come down, I am at a loss. So that is the more concern area. Otherwise, it's okay.
All right, that's the word coming in from IOC. That's an exclusive conversation. But for now, we'll take your leave on this edition of Trading Hour. Stay tuned. More market action coming up on Halftime Report.